to Fast Market on the TD Ameritrade Network. I'm Tom White, joined by my co-host Kevin Hinks. But let's bring in our next guest for our cash tag segment. That's going to be Landon Swan, the co-founder of LikeFolio.com, joining us. Thanks for being here, Landon.
Hey guys, thanks. Appreciate the opportunity.
All right, so we've got Target, more retail earnings. Walmart getting slammed, and Target is down also, hit an all-time high, 268, 269 last November. But Landon, I look at this. Target's been a pandemic winner, but they've executed well also. This stock's still up 160% from 3 years ago. I mean, do you guys consistently see positive data on Target?
Yeah, I tell you what, this is an execution, just perfection, right? They've done such a good job over the years, and not just over COVID, but before that. They've always been ahead of Walmart when it comes to consumer sentiment by quite a bit when it comes to consumer happiness, way ahead on happiness. And just in general, they've always performed fairly well compared to their competitors. And it's amazing that they're basically double, right? If you look at right before the pandemic hit, their stock price is still double, even though they're 20% off all-time highs. What a safe place to have your money over the last few years. And, you guys just talked about Home Depot and Lowe's, how they always move together. Walmart's down 10% today. Target's only down 2%. Now, they have yet to report, but it just obviously shows you how different these companies are viewed by investors. If it was, if they were lockstep with each other, Target would be down much more than 2%. So there's hope that they're navigating things better than Walmart. And I think a lot of that comes from just talking about groceries, because you guys mentioned on your last segment, groceries is a huge part of what Walmart does, and their margins are razor thin, whereas with Target, it's not as big. They do groceries, but they have other elements. Now, when you look at the breakdown of what their segments are, you can see the growth over the quarter-over-quarter growth in these different segments. And you've got, the higher margins, things are up top, the lowest margins at the bottom. And so it's hurting them less than Walmart was being hurt. So, obviously, that between the two companies, we've always said that Target's got the better, the happier customers, the better happiness, and you can see that they've been performing better. If you bring that scatter chart back up, we can look at the overall picture, I guess, of the different companies. And one thing that kind of stands out to me is, when we always look at this chart, the bottom axis, the x-axis, is purchase intent. You want to be over to the right. The y-axis, the vertical axis, is happiness. You want to be high. So top right is where you want to be. There's a bit of a hole right now. Nobody's taking that spot. It used to be Five Below. They used to claim that. You can see that Target's doing better than Walmart on happiness, pretty close on purchase intent. Dollar General and Dollar Tree also taking advantage of the consumers wanting to stretch their money a little bit further. But Five Below is the happiness leader. So it's kind of interesting that you have a bit of a hole right now. Normally, if you get somebody in that top right, LikeFolio's pounding the desk saying this is the buy. Right now, we're a little cautious overall in this sector. But between Target, Walmart, I'd say that it's Target for sure long term. Again, a lot of it has to do with the grocery element. When you talk about food price concerns, that's almost triple over the last year. People just expressing concern over food prices. And since grocery is not as big a deal for them as Walmart, I think that shows that they're better positioned to handle this. Grocery delivery is down significantly for both companies, about 17% year over year, whereas with Amazon and Costco, it's down even more. So overall, yes, the data has always been positive on Target. It continues to be. And what a great place to have your money over the last 3 years. I'd be very comfortable as an investor in this company and not too shaken by Walmart's results this morning.
Landon, you're touching on exactly my thesis for this discussion, which is Walmart and Target are not the same. They're similar, but they're not the same. Right? Target has its partnership with Ulta, right? That's a big deal, and that seems to be really driving a lot of their sales lately. That partnership has really been a winner. Home furnishings, apparel, all things that Walmart really doesn't play as hard or as well in. And you're right. I don't know anyone that has a better experience at Walmart than they do at Target. It's just a different all-around experience. And in terms of price-earnings ratios for these stocks, Target's is, it's a 15 PE. So I guess, Landon, what I'm trying to say to you is convince me that Target is not Walmart.
Yeah, I mean, you can walk into two stores and I wouldn't have to convince you. Go into one, then go into the other. You're exactly right. It's a completely different experience. I mean, Walmart is all about the low prices and the deals, but I think they sacrifice a lot of user experience and just general, I guess, happiness. You go into a Target, it's clean, it's nice, it's organized, they've got better products. Walmart is discounts and price cuts, and it's a different clientele. And of course, both companies make money, but if you're operating on razor-thin margins and you get inflation and people want to stretch their dollar more, then that's going to hit the company harder that's operating on those razor-thin margins, whereas Target has a few things, like you talked about Ulta and the others, that are a little bit higher margins, and they can get by with padding that a little bit, and it's not as a big of an impact. So I think it's really critical to separate these, and I think that most sophisticated investors understand that these companies are very similar, but also worlds apart.
Yeah, and one of the things in the scatter plot that you have now, you've got Costco, which is positive, right? It's not in the upper right; it's in the upper left. I mean, who doesn't want to go to Costco? I mean, if you look at their numbers on a monthly basis, because they report monthly sales, you would think that Costco would be that retailer that's in the upper right, where you've got positive commentary and purchase intent mentions on this one, but that one seems to have pulled back. Is that a concern for Target? Because I always compare, people love going to Costco just like they do to Target, right?
It is, but see, the thing about this chart, remember, this is a year-over-year chart. So you're comparing Costco to a year ago Costco, and they have just been absolutely dominant during COVID, absolutely crushed it. And so they have the hardest comps of all these companies. So it's not as if people are stopping going to Costco. It's that they didn't go as much as they went a year ago. I think that's really the key. Same with Amazon. Obviously, people still shop at Amazon a lot, but a lot of that has pulled back as e-commerce is down. I mean, if you look at MasterCard's data, e-commerce is down 2% year over year, whereas in-store purchases are up 10%. So, things like that are going to move the needle a little bit. But for Costco, it's all about ridiculous comps. They absolutely crushed it. I would actually say of all of these, Costco and Five Below are probably the two COVID darlings that crushed it the most. And I don't think it's a coincidence that they're at the top of the chart when it comes to happiness. People tend to continue to go back to these companies that they love and have good experiences with, and they tell their friends and family, and they go as well. So that's one reason we're always looking at happiness, and that's one reason that LikeFolio is always lean towards Target versus Walmart, because they've consistently been, 10 points above them. And if they're two companies in a similar space, with a 10-point gap in happiness is ridiculous. And we talked about Home Depot and Lowe's yesterday. They're separated by 1 point. It was a big deal that Home Depot overtook Lowe's on happiness, but 10 points on happiness means that these companies are operating completely separate business models, completely separate.
Yeah, I always think of it this way, Landon, because, Walmart's so much bigger. People need to go to Walmart. People want to go to Target. And that's the way maybe your data reflects that a little bit too. But if you did have a score going into earnings, what would it be?
Yeah, we're pretty much neutral. I think we're +8, so we're in the neutral camp, kind of sidelines right here. If they do post good numbers and sell off, I think that would be a good opportunity to pick some shares up. But I'm not going to play anything going into earnings, or maybe sideways if implied volatility is too high. I'll let you guys work on that. But overall, pretty neutral going into earnings.
All right. Great stuff, as always, Landon, breaking down the data for us on Target. Appreciate it. Have a great day.
Thanks a lot, guys.
All right. That's Landon Swan, the co-founder of LikeFolio, breaking down that data. Kevin.